Alrighty guys, welcome back. About to get started here just in a minute. Awesome, making sure we're all good on the technicals and audios are all well. Awesome, we got the video back today, so let's see how this goes. If it goes out, so sorry. That is just something I still got to work with, but it seems to be doing okay. I did a test run yesterday, so it seems to be all right. But awesome, guys. Welcome back to MTV today, guys. All my new patrons, welcome. All my returning patrons, of course, welcome back. Glad to have you guys here. Hope you guys had a great long weekend. I really enjoyed barbecue and remembering those who made the ultimate sacrifice on this Memorial weekend. But thank you guys for being here today. Got a lot of great information to cover. Just got a couple little things I got to chop up with you guys. For all those who were in the Patreon and missed the video for Memorial Day, that got posted on the 30th. I had it scheduled for the 30th. I didn't want to post on Memorial Day just to have you guys enjoy your times with your families and, just remembering and really just wanted you to have a stress-free day. Didn't really want to have you guys watch videos on there. But if you guys want to go back and watch that, you guys can. All my newer patrons, I don't know if this is accessible to everybody. I'll have to go double check the settings, but for right now, I believe this is just only my Patreon members. But alrighty guys, so really getting to the agenda today. I didn't have a strict Grammarly agenda that we usually go through. I did just pull some articles, of course, like usual, that I read that I thought were going to be handy. Got a couple videos. Oh, excuse me guys, so sorry. I got one video that I wanted us to watch. We're not going to watch the whole thing. It's 8 minutes. I think I'm going to skip about 3 minutes in. We got also just some, I got to scroll back out to the top here. I didn't get down our, oh jeez, why is this so long? Oh my goodness. Oh wow. That must be an error or something. I don't know. That should not be that long. But anyway, we're going to go over some potential bullish catalysts for Ethereum in June. We still got some great updates and some news that still go on behind the scenes. Price action doesn't always, determine how great the market is, even though it kind of does. The news is always going to cover more bad news than they are good news. We're going to go over some current inflation rates. Going to kind of be covering how this is an issue, and we talked about this in my video on the 30th. We did some light touches on some of these. I didn't go in depth, and because I wanted to save these for our Tuesday stream, just so we can kind of cover them a little bit deeper. Also, I got a nice little fun article I thought was good, kind of just some alternate strategies, 22 immature beliefs about investing that can harm you financially. And honestly, I agree with this. I read through some of this and I thought a lot of this was pretty cool. Just in the sense of, people, we all put ourselves in the same basket in terms of some of these phrases. We also going to go over some other articles for long-term and short-term holders. I'm going to go over some week news on Ethereum, just from what I get for work and stuff. This is a newsletter I get every week, for work, just to see, what the updates are, mainnet executions, proof of stake consensus layers, layer 2, and etc. We also got some Coinbase news with Apple Pay and Google, which is really good. Oh, actually, guys, this is actually super cool. I want to show you this. I updated my Venmo today. Look at this. So I got a screen record. I wanted to show you guys. So this is super cool. You guys probably have it too. Look at this. Crazy, right? Isn't that cool? Super sick. So yeah, if you guys update your Venmo, I don't know what version it was. I didn't even read like the patch notes or anything. But if you guys most likely open your Venmo, you're gonna have. Here, I'll replay it for those who didn't see. But if you open up your Venmo, you're going to have something along like this. So you can invest with just $1. You can invest through Venmo now, which is super dope. We saw Cash App kind of have it first, but I thought it was super cool to put on here just because I know a lot of you guys use Venmo and a lot of people use Venmo. So that is really, really cool. I thought that was sick. I saw the Explorer in the corner. I was like, oh, let me click this. Also going to be over some SEC, final approval for Bitcoin ETF that is still on the table. Also, we went to the Patreon already. So for those who need to go back and do a little brush up. And also, please, guys, don't forget to try to check this as often. I'm still working on a better notification system to get that better for you guys. Because I know checking the Patreon can be a headache. Sometimes you just forget. And it's just sometimes they don't alert you. And you guys know how it is. So awesome. Alrighty, guys. So first, we're going to save our video for a second just because I want to hop into our first bullish catalyst. So 3 potential bullish catalysts for Ethereum price in June. So running down, we've talked about Ethereum and what it can do, what it can hold. We talked about the video on the 30th. For those who didn't watch the video just yet, we had talked about how Ethereum nodes and Ethereum's ecosystem is accompanying SpaceX into delivering the first ever Ethereum node to the ISS space station. So what we've talked about in nodes, for those who don't know what a node is, kind of just thinking about a single point of failure. So just like how you have centralized exchanges, if servers go down for a website, they're down, they're offline, you can't go on there. So the cool thing about Ethereum is one of its amazing features is that it has no single point of failure, so it has multiple, points that continue running, 24/7, 365. So let's say, point A goes out and point B, then we got point C, D, E, and F. That's really the simplest way of putting it. There's no single point of failure, therefore runtimes are, always up. And really going down to, the slingshot, that Ethereum really has is that we've seen the attention, come from billionaires, millionaires, companies, enterprises. They've switched their narratives. A lot of it was Bitcoin. A lot of it, was that Bitcoin, just maxi, not really maxi talk, but a lot of people like Bitcoin. And, now people are turning their eye over to Ethereum, kind of a little silver star in the corner of your eye, and they're seeing all the use cases. We've talked about consistently the use cases of smart contracts and decentralized finance and, asset class and, not even just Ethereum being a source of payment, but, Ethereum kind of attacks every sector. If you think about it like Amazon on the wheel, how it attacks shipping, the cloud services, the produce section, that's pretty much the same way with Ethereum. Ethereum is a very, very, very diverse asset. And not only to mention that, but we do have our major network upgrade in July. So we're going to cover that over in this article when we get to that. This is something I get for work and something I need to continuously review because this has a lot to do with my developer side and how we construct these actual applications. But meanwhile, EIP 159 is also proposed to burn transaction fees, and we've talked about how these are going to not eliminate gas fees, but make them more predictable and make them more user friendly and more user integrated, for people to use the network in a reasonable and effective way, especially for the new users, because we've talked about how enterprises and big companies don't care too much about the scalability just yet because, a couple $1,000 to them isn't too much. So actually, let's see how long this clip is. I did not clip. Oops, sorry, it's a bit loud. Goodness, it's only 2 minutes, so we're actually going to watch this real quick. So this is from Kyle Semi and Kayan. So I think these are two. I follow one. Tim Bioke is one of the head core developers over at Ethereum. I actually put in an apprenticeship last week for that, actually. So I'll let you guys know if I do get that, just to kind of get off topic and side note. But we're going to play this real quick because I know this is a big slingshot for a lot of us Ethereum holders and Ethereum believers that, when we get this update, whether there's a ton of it that goes into it. EIP is a very broad chapter of many chapters in it. There's a lot of different smaller protocols inside this larger protocol, which is EIP 1559, that is really going to slingshot us forward and make things a lot better for the way we move in the ecosystem. So I'm going to give this a quick play and then we're going to move on.
We see EIP 1559 go through. Do you think
Sorry for the quality.
That could change that dynamic?
I think it makes it worse, actually, right? Like I think the price appreciation it's the price appreciation of the and the starting point that that most people got in, it really makes it hard for that wealth effect to kind of spread, right? Like if you think about the average person who comes into crypto and they want to maybe deploy 10 grand in capital, right? Which would be pretty high, but let's say they get 40, right? Now, unit bias is a dumb thing, right? Like if you believe that Ethereum is going to appreciate on a percentage basis more so than Solana or BSC, and you're just purely looking for capital appreciation, then you should buy those 40. But there is an element of people want some level of meaningful ownership, right? And if I turn up and I can get much more meaningful ownership of something like Solana or BSC, it's not just unit bias. There's other factors there where people feel like they just don't have a decent stake of the network, right? And so I think that wealth effect that has really, kind of accelerated for BSC and Solana is quite powerful in terms of locking people in.
The problem, as Kane alluded to, is as the price of ETH/USD goes up, Ethereum becomes more expensive to use. And like even Arbitrum and Optimism, I don't think will be cheap to use. They will obviously be cheaper, a lot cheaper than the ETH mainnet is now. But assuming there's no subsidies, I think you'll still be, $2, $3, $4, $5 transactions. Transactions are not going to be 1 penny or 2 pennies. Look, again, $2 transactions are manageable for most people, but like for the people who are putting in $100, like that's still not reasonable. People who are putting in, $1,000, they can live with it, but for actually the long tail of retail, it just doesn't work. It still doesn't work. It's just like a big logistical challenge, and 1559 will short-term feel very good.
If you enjoyed watching this clip, hop on
Absolutely. Well, that was actually the first time watching that video as well, and so I didn't know what to come, so that's definitely why I played it. And they do bring some great points. I did not agree, of course, with a lot with what they said. Yes, we know that the scaling solutions are going to be more available, more readily to use, and he did mention that the $100 and person who want to exchange and move that may not be worth it to a person. But then if you really think about the catalyst of grouping bank fees and overdraft just everything within traditional finance, like there are people who have exchanges pulled out of their have funds pulled out of their account that they don't even know we're having funds pulled out of their account. Memberships you forgot about. Banks charge you just sometimes a fee for even having the account open. I know for my business account that you need to have, I think, $2,000 plus or something in the account for the month, or something more than that, or pull in a certain amount, or else you pay like a $15 fee every month. So there's definitely pros and cons to everything, but definitely need to remember that traditional finance is not, of course, the best either. We definitely had our wins and losses for sure. I wanted to hop over into our current U.S. inflation rates. So I definitely wanted to put this into perspective just for a sec. We talked about this on the 30th, but this is just something that this caters, pretty good to what we were talking about, what we're, really moving forward in the direction. So April, 4.2%. We haven't gotten May yet or June, but you can kind of see, here, let's zoom in. Not good at all. And we talked about it in our last video too. I feel like I'm going to say that a lot, but we kind of just touched it up, but I'm going to elaborate on it. We talked about inflation rates and how, we're fighting for a world reserve currency, the United States. With the amount of money we're printing, we know that we're having another couple billion coming, maybe another trillion for stimulus packages, or I know we're gonna have one more stimulus package before we go. But the issues that we have here is that eventually inflation is going to be ridiculous. It's already climbed a good amount to where it is now. 4.2 is insane. But moving forward, we've talked about how any person holding cash, you understand that you're losing money every year, and that process may be ramped up in terms of becoming quicker, really coming at you fast. So in the sense of holding assets that are gonna not depreciate in value. So we've seen gold not be okay. Let me put it like this: so you have an ounce of gold, it will always be an ounce of gold. No matter what the stock market tells you, the gold market, an ounce of gold is going to be an ounce of gold. Just like one Bitcoin is going to be a one Bitcoin. It doesn't matter what price the Bitcoin's at or the gold's at, it's still going to be equivalent to that. Now, cash, on the other hand, no, that's completely incorrect. Year over year, you lose a percentage of your value from holding cash. So that's definitely the term I wanted to put it in. So people moving into hard assets a lot quicker, just like we saw in the March crash, will be present. It's just a matter of where people go. And with the adoption of where we're moving, at least with the cryptocurrency space as a new asset class, something we don't get every day, that is something that a good portion of money will go to, and that will be another sense of keeping your money intact and having you not lose thousands of dollars every year. It may be, I know we were talking about interest rates as well, that interest rates stay at zero, and we're going to talk about that later, about how the pros and cons of that. There's more cons than pros, but you can see how having a zero interest rate is going to be, and if it stays at zero, we're hoping that it stays zero. If it starts going negative, then we're really going to have a problem, because if we go to zero and we start going to negative interest rates, and then we start folding in ourselves, where you're losing money, like let's say, okay, 0.5% may not be a lot, for someone with, let's say you're making $150,000, that may not be astronomical, but let's talk about 1% or 2%, where you're losing 2% of your value, your money every year. That's a big deal. And the bigger deals usually get hit first. The millionaires are the people the people with a lot of money in accounts usually see that first. The average Joe doesn't see it right away, but you'll start seeing the ripple effects of 2%, if it gets to that point, even 3% of how much money that really is when you put that in terms of actual percentage weights. 3% of $200,000. That's not something you want to give away every year for something that you have no control over. That's just something that is not going to sit well with people at all, and it shouldn't sit well with you at all. That you're going to lose no matter what you do. If you keep that in a traditional bank, you're going to be losing money. That's crazy. So definitely wanted to throw that in there. We're going to skip this one for right now. We'll go back to that as well. Also wanted to go over to our article. I don't make these titles, guys, so please don't hurt me. Weekend shaking out, short-term Bitcoin holders sell at a loss. So we've seen a lot of these metrics that we know a lot of people are selling at losses. So, and that makes a lot of sense. Just like we talked about, these hedge fund guys don't care. These guys don't care about you. They don't care about you trying to save up for your grandchildren, or get your family good in a position for the future. No, these guys want it all now because they have families as well, and they're trying to preserve their wealth and continue the boat moving for their family. So like we've seen the price action manipulation. We know it's present. We know it's there, and we know that this can be an emotional time and psychological time, especially, within these markets. But in terms of really seeing how, people are selling at a loss, it's feasible, when you don't understand something, especially when you hop into something you don't understand. And it takes something as big as what we've had, a 40, 45, 50% loss, you're going to want to step out. Absolutely. There's some people who just say, oh, I'm down so much, I'm just going to hold it out. And that's a good way of thinking, especially with something like this. But, what we did just see over the past, 6 to 8 months is we saw a lot of greed. I had people calling me that have no idea, have never invested a penny in their life. And this is not, it's not a bad thing if you're here for the technology, but if you're here just for the greed to make a quick dollar, it's going to get ugly really quick. That's just the truth of it. And that's really with anything, if the quickest way to go broke is to try to get fast money. And that's true. It's like going to the casino and expecting to hit black 4 times in a row. It may happen, but it's not going to happen consistently. So, and we've talked about that a lot as well. So this is a real big patience man's game. And if you understand the technology and how it's moving forward, and, every day, you're here or you're somewhere reading about this type of stuff, we see it every day. I see it every day. We see, people, big corporations, adoptions, enterprises, people, coming out time and time again, like even just having the nodes into the ISS, that's a big deal. Like that is a big freaking deal. And I definitely just like to made this channel just for information, to show like the magnitude of what happens every day when you go look for this information. Because this is basic information you can find. You can look this up, but you might have to do some digging. There are going to be some articles you're going to have to read, for those who, research this stuff off topic, like I, preach all the time to, my students and my patrons, that, you go off and research on your own and you go look and find these type of readings. You're going to find a lot of great stuff, a lot of great stuff that is happening behind all the smoke and all the fire and, bad articles of banning this and banning that. People, my job doesn't stop because we have bad price action. No, updates are still rolling out and I still got to do things. So, but the weekends in terms of, people being shaken out, that's exactly what they want. They want people to, toss their stuff at a loss, down the ladder, to the big whale guys who are just eating it up on the daily. Those guys, it doesn't matter that those guys, they're down millions of dollars or multi-million dollars. Like they saw the potential of what we can do and what this technology has. Like we topped out at like $65,000. And still, and like people ask me like, oh, what are your thoughts? I'm sorry going on a rant here, but this is kind of just this is kind of something that needs to be said consistently, because I think it's important that where do you see us now? I've had plenty of people tell me like, oh, like, how are you doing? How's your crypto? I heard it's terrible. I'm like, yeah, dude, it's going great. Because I'm here for the long term. I'm not here to make a short dollar. I'm here to trust the technology and, have it change my life and, continue, to show me and get readily adopted. So that's just my way of putting it. And we needed a cool off. We've talked about that plenty of times as to metrics, as to how that's been an issue with us for a while. Now we've been pretty overextended. So, alrighty. Cool. We're going to go to our week news in Ethereum. This is something that I receive as a developer. I'm going to have more videos as to kind of what I do for work. Because not a lot of you guys, but some of you guys were asking, really what a developer day is a developer's day is like, and what we really do. But I'm really just going through this real quick. We're not going to go through every section, but I get a newsletter every week that goes over security, ecosystem, stuff for developers, just a lot of different stuff like layer 2. Some of you guys may not even know what this is, but and that's okay. That you don't have to know what all this is, but some people were asking, and I thought this was pretty cool to share. Proof of conscientious layer. So really the main portions of what I look at, I read it all, but the main portion of what I look at are EIP updates. So we've seen this. Mainnet execution layers, how this is going to be playing. So all this is explaining right here are EIP 1559 update, because as a developer, you need to understand and be aware, of, because it can be as simple as, we can getting changes of, moving your syntax, to the end of your function to call it, or you can, enclose your brackets for, function. They're just small things that could possibly, be changed or, shifted. We now have our unofficial London mainnet date now for July 28th. So that means by July 28th, we should have our full rollout for EIP 1559, which is pretty great. And you can see why, that's a big deal for us in terms of, deadlines and, the timing and security. Also for some more stuff for developers, we go over some extensions and other things that are going to help us, continue to move forward with the language that make our jobs a lot easier. A lot of the really hard stuff is kind of done for us already. There's still some critical thinking that needs to come in play sometimes, but a lot of it's really been done for us. So this is a really great one. You guys can sign up for this too. This isn't just like bound to me or anything. You can go to Week in Ethereum News, and you can literally just sign up, subscribe, and they'll send you this every Sunday, I believe, completely free. So if any of you guys want to keep up with that, I highly recommend it. I've been on it for a couple months now. Love it. It's phenomenal. And going through Coinbase adds Apple Pay and Google Pay to their crypto debit card. So this is also great to see. You always like to see stuff like this too. You know, you see people like Apple, Coinbase, and we knew that Apple wasn't going anywhere. We knew that they haven't talked a lot, and a lot of these bigger companies haven't talked a lot. And the issue is a lot of these private equity funds and some of these private companies don't have to come out and tell you guys anything. You know, they might, but you know, we've seen it time and time again where you've seen bad news. You know, things are not good. Red. Boo crypto, and then next thing you know, you got big boys coming out and saying, "Oh, hey, we just bought $1 billion worth of Bitcoin, or we just bought $1 billion, or half and half. We bought 50% Ethereum, 50% Bitcoin." You know, a lot of these guys, and I've said it time and time again, but you know, no one wanted to be that schmuck institution buying it $55,000, you know, $60,000, you know. It just didn't make sense. It was not a good financial move for those big guys who are throwing in $100 million plus. And you can obviously see that, and as to why that wouldn't be a good one, because they would be regretting their decision pretty bad right now. But that's okay. You know, that's 100% okay. Because now, you know, we have stuff like this that continuously comes out and shows us that, you know, these guys thinking their thinking caps are on. You know, it's a day-to-day process. You know, but the stuff isn't stopping. And it just kind of gives us that more reassurance. And you know, I don't even really like looking at price action, even though of course we do and we need to. But you know, in terms of like, follow the money, not follow the news. So you know, when people come out and say stuff like this, you know, I guess this isn't term real money. You know, they're not coming out and saying, "Hey, we bought this much," but this is a really good tie-in to follow the money. Like if they're adding payments to do this, it's probably a good idea that we could pay close attention to these guys and see what their moves are, and see how the way they talk. Just because you know, some of these sources that we've talked about are not always the best. CNBC, we watch CNBC on this channel, of course, but we do it to get a different perspective and see how they view it, because everyone's thought process is for sure different in this market. But definitely wanted to throw that out there. Wanted to make sure my time is good. We're at 22 minutes. Awesome. We're also gonna go over more than $5 million worth of Ethereum is locked up. Oh, I'm sorry. More than 5 million Ether worth $13 billion is locked up in ETH 2.0 staking contracts. So we talked about how Ethereum's staking, what staking just means is that, you know, you are in full support of the network. So you are willing to lock up some of your funds. So this case, your Ethereum, and lock that into a smart contract for 6 months, a year, whatever that may be. The benefits of that is that your APY, you're getting some great passive income for that, you know, depending on how much Ether you have staked, you know, if you're a validator node or etc. It all just depends how much Ether you have staked in there. But all that really is that people supporting the Ethereum network for future. So people are, you know, I stake as well. So I trust the Ethereum network. I trust them enough to lock up some of my money, some of my funds for 6 months to a year. You know, just for me to earn some passive income and also support the network, because, you know, this is something I do support, and I think it's going to, you know, help change the world for better. So this just shows confidence. You know, this is always a great thing to see when you have products that have great staking, good staking pools and good amounts. Like, that's a lot of money. You know, this is the Ethereum staking for the past 6 months, or validators, Validators have actually climbed pretty drastically since April time. Yeah, since April time, it's climbed pretty drastically. So validators are, all that is, for those who don't know, is that those who hold a certain amount of Ethereum, usually it's 32, but some do require 16, that if you do hold those massive amounts of Ethereum, you can start what we call validator nodes. And what validator nodes is that they process transactions through the blockchain of Ethereum's ecosystem, and you can be, you know, a validator, so you can make sure those transactions are being, you know, sent through, they're being validated, and, you know, they're getting to the right place. Of course, you won't have to actually, you know, sit here and like type, you know, do anything. Of course, your system, you know, takes that in play, but it's the fact that you have enough Ethereum to run other people's, you know, nodes, or I'm sorry, you have enough Ethereum, you know, in your validator node, that you're able to take other people's information, process that through, and send it through. So there you go. So think of you like a gatekeeper in a way. So it's really good. Validators have a great reputation, and they have a great, you know, overall, like, long-term play. There's some points where, you could be a validator, and there will be a point possibly to where you could be a validator and you could live off your validator rewards, because you're making, 6 to 8% APY, and therefore, depending how much Ethereum you have in there, that's about, let's say you got 4 in there, at 4 to 6, maybe, okay, let's just do 8, you got 8 in there, you're making passively an extra 1 to 2 Ethereum a year, and let's say, Ethereum is trading it, $4,000, like we talked, I won't call it numbers that we haven't done yet, but you guys can see, how quickly that can add up. That's actually like 8 to 10K a year, depending how you use that, that's pretty good. That's really good for you not doing anything. So definitely want to lay that on the table and kind of just show that that's a for sure plus. Cool. And also this is the zero interest rate policy that we're talking about, the ZRP. So we had seen this before. We saw this in Japan in 1990. United States had this in 2008 as well. And we saw the risk and some of the pros from this and the issues. So the risk, I'm just going to read this first sentence. Despite the USA's progress, economists cite Japan and EU nations are example of failures of ZRP. Low interest rates have been attributed to the development of liquidity traps, which happens when saving rates become higher and rendering monetary policy ineffective. So, we talked about this at the beginning too, that if there becomes a point to where, we start folding in on ourselves and, there will be a point here and it will happen to where the U.S. will have more debt on more interest money on top of their original debt. So just interest, not even just the original payoff, interest of what we already have. So we got 28 trillion in interest, or no, I'm sorry, we have 28 trillion in debt on top of another at least 5 to 10 trillion dollars in interest. So to the point, and that's more than we are pulling in the U.S. as an income. So we aren't even making up enough money to pay off the interest. So what happens then? Then you just get more and more and more, and you print more and more and more. So when these things start folding in on themselves, and if we do see this, where you start getting negative interest rates, and the gap starts to get to -1 or -2, even 0.5, that becomes an issue, and that's where you have people running to assets to store their wealth, to not be messed up by the year over year of you losing your value in your cash, because it's proven ever since I was born, 1999, the dollar has lost 40% or more of its value, and that's just truth, and every year it gets more and more and more devalued. So, there are reasons why we're fighting for world reserve currency, and, there are issues with people around the world that say, hey, we've seen this happen before, either in my country or, every economy has had something pretty close to this, but I don't think the U.S. has had something this major. But then if you think about it from other countries' perspective, to where EU or South America, to where you rely on the U.S. dollar, because we're that medium of exchange, that is the pretty hefty price, that people are, they take the U.S. dollar and they care very much about it. If you're in South America or Europe, and you're looking at the U.S. and saying, hey, this dollar is becoming less and less, and this is kind of our only option. What are we gonna do if you guys go under? We have nothing else that is gonna step up to the plate, and that's the truth. We're gonna have to switch either world reserve currency, someone else is gonna have to take the place, or there's gonna have to be a flip in the monetary system. People are gonna have to start over. We're gonna have to start over. That's just the realistic truth. You can't keep doing this and expect not to have consequences. So that's the real take on it. So what happens then? You got people running to buy assets, gold, cryptocurrency, real estate, precious metals. I'm trying to think what other asset classes there are. There's a bunch of them, but that's where people are going to start storing a lot of their wealth. Banks will still be here. I'm not saying that's this is the close of banks, but banks are going to have a real transition here in terms of their whole rewriting of rules, because it's getting to the point, guys, we see it and we talk about it. It's getting scary. It really is. It's getting really scary. We're not going to feel the ripple effects right away. Oh no, and we've kind of already seen a little bit of it. Gas running out. Things are a lot more expensive. You look at a basic meal, things. When do you remember a basic meal being $12? I've just seen it. You can see it every day in small little portions of your life that are oh wow, this is real. This is 100% real. So definitely want to kind of go on a small little rant there, kind of get that out of the way. And last one before we wrap up, guys, we're going to be going just a real quick, the SEC and their final approval for Bitcoin by 2021. Is that something that we can do? I do believe so. I believe that's something that we're achievable. We have not even had a Bitcoin ETF yet. talk about it at least every stream, but it's also a really good assurance because that is some of the biggest news that will possibly come out this year in terms of cryptocurrency. Not Elon buying, not Michael Saylor. This right here, I truly believe is going to be the biggest topic release or news release that we're going to have when it does happen. When they drop a ETF for this, I do believe that's going to be the biggest news we've had all year. The SEC, they have their concerns, of course, and we have our concerns, but regulation isn't always bad. We've talked about that as well, that you need regulation when pretty much almost anything. That doesn't mean they need to be digging in your pockets and knowing everything about you and all your information, but in terms of these business guys and smaller rules and regulation, that's fine. It's been a love-hate relationship with the cryptocurrency community and regulation, because people think regulation and they think like full on 100%, like I need to know everything about you, and that's just not always true. So I do believe this is going to be a plus for us, and they have their concerns as to why they would reject, but the USA they don't like being behind. We don't like being behind anybody, and when you see other countries who are thriving with this technology and have multiple ETFs such as Canada and other places around the world, and how that benefits them. The USA does not like to be behind by pretty much anything, and like cryptocurrency here in the United States, of course, is nice. It's a great asset hold, and it's good for us in the States. But in real terms of people around the world who have it have it a little bit different than us in terms of economic development and just overall needs and resources. Like this is a big deal for a lot of people. This is having cryptocurrency acceptance versus we're just overall very blessed in this country. I'm just gonna put it at that, and we've said that plenty of times that we know why, and we can count our blessings on our hand and understand why this is beneficial to us. So give it time. Time is on our side. That's really as simple as I can put it. Not going anywhere. I'm always very transparent with you guys. We are here for the long haul, not shaken up at all. We've been through it, and I'm here to guide you guys through it. Absolutely, the best I can. I'm just talking about battle scars, guys. That's really it. I'm talking from battle scars. Was there in March? Was there years ago when things were like this? And compared to what I saw, the last blow off top, this was nothing in compared to how it went. And I hate to bring up the past because sometimes people say the past isn't always what is going to happen, but it's been rhyming pretty hard, and that the blow off top that we saw at 65K is nothing to what it really is. Really, when we are gonna have that massive blow off top, like cycle peak, where everybody is flooding in. If you think that was crazy what we just had for 6 months, just wait, stick around, and see us bleed into next year as things continue to develop and get better. So alrighty guys, I don't think there's anything else for us today. Here, let's watch a little bit of the CNBC clip, and then I'm gonna clock you guys out of here just because I didn't watch this. I want to see what they say. It's got some really bad ratio, so let's see what some of these guys got to say. Let's start from let's start from
currencies, commodities, and there's no reason it can't happen in Bitcoin. And so that level is 20,000 plus or minus. So the question is, could we possibly, having dropped already 53%, could we go down that far, which we'd be looking at a 70+% decline for peak to trough? Well, take a look at the last two charts. We know that Bitcoin has had three similar drawdowns that have actually been even more severe. In 2011, we had a 93% decline. Now, it was new then, and of course, maybe a different animal now, but yet in 2014-15, we had an 86% decline. And then in 2018-19, we had an 84% decline. 93%, 86%, 84%, meaning it's not out of the question. So final chart, putting those all together, you see those three similar drawdowns, even as this one continues, sort of 80 to 90%. And were we simply to pivot back to the highs from which we broke out, that would be the December 2017 highs, we would drop as far as 20,000.
Wow,
No.
20,000. Carter, thank you. Carter Braxton Worth.
Okay, I didn't want to watch this whole thing, but I'm gonna note this because that is not out of the question. Not saying that can't happen. Do I think that's gonna happen? No. I think the lowest we could go is 25. I don't think we're gonna hit 20. I don't think that's gonna happen, just for a couple reasons. We got big money here now. What he's covering here, that was retail driven. still retail mainly driven. We didn't see institutions really hop in here until about 6 months ago, 6 to 5 months ago, and we were making these rallies just off retail ourselves. So if you think about how far we've come just from a retail standpoint, pretty impressive. Now that we have financial institutions here with big bags and really big money, I don't think they're gonna. And some of these guys have gotten into different price points as well, and they're gonna be buying more. They will. And of course, I'm just saying this out of just my opinion. These guys have thresholds in their mind, and there are price action targets that they do not want to slip below. They may help their billionaire friends out and say, hey, definitely grab some at this level or, at this, but we got some pretty big money here. And, these guys got a lot of money, and they like making money, but these guys also don't like losing a lot of money, especially consistently. They can sleep at night, but in terms of, really wanting to get back on track and, keep their ROI consistent, I think these guys are going to keep us afloat for a bit. I think there are certain levels that we may never break again. And 20K seems feasible. That's another about 25 to 30. I think that's another like 40% correction. That's a lot, guys. Like we just already experienced 55. That's another, you're throwing another 35, 40% on us right there. So, it could happen. It has been a roller coaster, but in my opinion, I don't think going that low is good. And CNBC has a terrible rep with being wrong about this type of stuff. And I know one of the comments said this pretty well. Yeah, when CNBC tells you to sell, that's when you buy. So yeah, they have a very bad rep with being off target with calling price targets with Bitcoin. Like usually when they say 20,000, it's complete opposite. It'll go to like 50. Or when they say buy, it crashed. It's a whole spill chart. And I'll have to find it because there's a whole collage of how CNBC it's got every single chat or like title that they've had of calling, and it's like all wrong. It's crazy. But just wanted to get that in here. We like to see their perspective as well, just because it gives us a stronger argument. That's really the main reason. So alrighty guys, that's pretty much it for the day. I hope you guys found this informational and it really helped you guys out. Per usual, like, share, subscribe, friends or family, anyone who would find this information beneficial. We'll be back here on Thursday. I'm gonna drop some videos throughout the week, hopefully. I should have a pretty lighter week this week. The last week was pretty crazy for work. But we're gonna, be dropping some good information, keeping on top of, what's going on as we continue to move forward. If you guys are still here, still loving this, then, you guys are the elite few. There are a lot of people who are not here anymore. It's very, very quiet. A lot quieter than what it was the past couple weeks to months. But alrighty guys, thanks so much for taking your time. I will see you guys on Thursday. If not before, stay safe and have a great week, alright?